The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the January 14th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with some empowering beliefs. You know, these beliefs here, they're brought to us by our great producer in the studio, Mr. Alberto. I like to call him Alberto. Al is really his name out there. And on, I think it was on Thursday, he came up with these beautiful words out here. So let me share them with you again. Goes like this: watch your thoughts, for they become words. Watch your words, for they become actions. Watch your actions, for they become habits. Watch your habits, for they become your character. And finally, watch your character, for it becomes your destiny. Well, let's go check out the destiny of the markets out here right now. Dow is up 44 points. It's trading out at 16,302. S&P is up 7 points, trading out at 1826. Composite up 25 points, trading out at 4139. Russell 2000 up 6. Today is going to be a very important trading session. Very important trading session. We'll talk about that in a bit. Apple is up $4 and change. Leading the charge to the upside this morning, you've got Intuitive Surgical up $37.71, trading out at 430. Up nearly 10%. Google's up $11 here. It's trading at 11.33. Biogen, BIIB, had a key reversal session yesterday. So this is important. We'll go take a look at Biogen. 290.82 is what it's trading at. You've got Shire PLC up $4 and change. Cimerix Energy, XEC, that's up 5% this morning. Amazon is up $4 and change. Fossil up $3. To the downside, Intercept Pharmaceuticals off $43. Of course, that thing has been a rocket ship. Stratasys, SSYS 3D maker, off about 8%, down $11. X1 down $5, down about 7.5%. GameStop, man, getting just hammered out here. GME is a ticker symbol, off 20% this morning. They must be out with their holiday numbers out there. Of course, GameStop is a brick-and-mortar place. Maybe I'm sure they've got an online business out here. Doesn't say much for the brick-and-mortar business. Let's go out to, I'm assuming it might be Nashua, Wisconsin. Chris? Chris, you out there?
Well, yes, it's Nashotah.
Nashotah. It does say Nashotah. Now, I'm not from... Where is Nashotah, Wisconsin?
It's near Oconomowoc, Wisconsin. Indian names that are west of Milwaukee, about 30 minutes.
Okay. Well, you know, I lived in Milwaukee. I lived near Whitefish Bay for about 7 months. The coldest 7 months I think I've ever spent.
It just started snowing here 5 minutes ago, and I'm excited because I'm skiing a marathon the end of February.
Oh, are you? Okay, cool. You know, there's a there is a park not too far down the street from where I live called Brown Deer Park.
Yes.
And I don't know if it's still there, but at this stage it was a golf course as well. And maybe it's. I'm sorry.
It had a river going through it. You bet.
It also had a toboggan run or a bobsled run. In the winter that I was there, it was so cold that they actually closed it down at times, because it was so cold out there. I said, how can that possibly be? But it is. But hey, and actually some of the coldest. I was there. I moved there in it was like around the December time frame, and I was out of there by August. But I do remember in June or July, Lake Michigan. They have a great music festival down there. Oktoberfest, I think maybe is what it's What is it? Summerfest. Okay. And I had a bunch of friends of mine came to visit, and this is many, many years ago. And I remember that Lake Michigan that water is cold, even if it's July. So
yeah, it's about 65 degrees water temp in July.
one of the cleanest cities I've ever been in. I mean, you drive through the expressways. I don't know if it's still like that, but certainly one of the cleanest cities out there. It's where I actually learned how to really drink beer. And that is, my mom worked for, might have been Schlitz. Was Schlitz have you been there for a while?
Yes, Schlitz has been closed for many years now, but you're right. It was a founder, Schlitz, Pabst, Latz, Old Milwaukee.
Yeah, and there were basically bars on every street. Now, one of the things I remember, my friends, they were the one that had pointed this out to me. This goes back in the 70s, and what they were amazed about was that you could walk into a mall back then. I don't know if it's like this now, but you could walk into a mall back then and grab a beer, be walking through the malls. Now, I think that's actually something, if I were in the brick and mortar business, I might institute that policy because, shoppers are going to do a pretty good job there if they're drinking and shopping out there. And what else? There are a lot of cool things about Milwaukee for sure. But in any event, you didn't call to talk about that. And even though I was only there for a good old 8 months, I remember one of the things. Now, back then, when my mom worked for Schlitz, I used to pick her up from work, and they had these tours, and I could go in, just park on the street, go in. At the end of the tour was a little bar set up, and they'd pour you a few beers or what have you. So that was always nice. But at lunchtime, the workers would drink all the beer they wanted. Which was, to me, was
that policy and the company closed.
yeah, exactly. That's right. They changed that policy. Now, can you imagine these guys on the forklifts running around there, having a few beers or what have you? I suppose it's all relative, but I guess those were the days. In any event, you wanted to actually call and talk about natural gas, I think, and I think all I've been doing is giving you a bunch of gas out here. So tell me what you're doing and how I can help you.
Well, I'm looking at the Nat Gas 60-minute futures chart. And
which contract is it that you're trading or looking at?
I believe this is a continuous contract.
You're looking, okay, all right.
And so I'm seeing what I think is a pattern that developed as of the 8th of January. Is that an inverted head and shoulders that I'm looking at on a 60-minute?
Let's see here. Let me see. I've got my screen here trying to redo everything. So on the 60-minute, now this is I don't have the continuous up on my screen, but you're looking at the head being down at about the 9 o'clock session on January 10th. Is that what you're looking at?
Yes, that is correct.
Okay, and then what are you using as your left shoulder out here? What's the time or bar that you're using as your left shoulder?
I'm looking the shoulder would be in the Fibonacci replacement. That's a 50% level from the high of January 8th down to the low of January 10th.
Okay, so are you're using for a shoulder all the way down here at about a price level of maybe about $4 and or so, $4.10?
Yeah, $4.15.
Okay. Yeah.
$4.16. Uh-huh.
Yeah, so I see what you're looking at. Now, I don't trade the head and shoulder patterns per se out here. And this, but I see what you're looking at. That's for sure. Now, that just because I don't trade them doesn't necessarily mean anything. So then, what did you use for your neckline? Were you connecting then the swing point here at about 11 o'clock in the morning, and for your neck or so, you were using this little swing at 1,700 hours on January 2nd? Is that what you, in essence, were doing? You know?
Yes, I am.
Okay, so, one thing is if on a head and shoulder pattern, much like when we take a look at consolidations, head and shoulder patterns out there, your measured move is going to be in essence equal to the, if I were trading these, if I am, your measured move is going to basically be, from your shoulder back to your head out here. And that being the case, you're getting pretty close to completing that, which in this case here would take you all the way back up on that 60-minute chart to your 100% move of a move level, which is back at the 10 o'clock time frame on July 14th. But how is it that, Chris, how is it that you're looking at as far as being able to trade this? Or tell me, so yes, I think you've identified a head and shoulder pattern, and now how can I help you with regard to a trading
Well,
strategy.
I was looking at the momentum yesterday, a significant move and to the upside
Yes.
from the January 10th low, and then I used a 50-day moving average, and I looked at a few of the last 4 up moves and averaged them, and I came up with a price swing potential that would be projected at around $4.70 out in another mid-February. And
Okay.
I'm just wondering if between looking at this pattern, which to me gives me a little concern that it's going to continue to move to the upside much more than that neckline, should I be thinking that way? And if so,
Well, you've thrown out a number of different things here. So now what I am putting up on my screen here is the actual continuous contract, because I want to be on the same, in essence, the same pattern that you're looking at. And so one of the things that you threw out there was momentum, and one of the tools that I've built here, Chris, is a momentum trading strategy. And if you're watching on Tiger TV, or if not, you can go and check the show out on Channel 10. It'll be archived, in the next couple hours or what have you. And the momentum, when you see these little red, I've got different colored boxes. They're on my screen, and they're either green or red. I probably ought to reverse what they actually mean out here, but I've gotten so far into the programming, it's and so red boxes actually tell you that buyers are in control. So from a momentum strategy standpoint, natural gas on the 60-minute contract really gave you a confirmation. Let me get my cursor up here on the screen. Was really giving you a confirmation right around the trading session, about 1900 hours. And this was on, I got to put another box on my screen so I can give you the right date out here. Where is that box? Show data box. There we go. So right here, and this was on January the 12th out here. See, I've got nothing but these little red signals that form here. This tells you that buyers are absolutely in control of natural gas on a 60-minute chart, because you've not seen, it would be normal to see price pull back and form one of these little green bars. Are you actually looking for a buy point on this? To take it up to that 470 area, or tell me what your trading strategy is going to be, and then when we go to break here in about 20 seconds, I can take a look at that for you.
I'm looking to take a short up at the upper range of what's been a trading range over the last 6-8 months.
Okay,
so when
all right.
To the high side on the curve, I'm looking to short it.
Okay, great. Okay, so then when we get back from this break here, we're going to go take a look at natural gas. I'm going to look at the continuous contract with our man Chris from Wisconsin, from Nashotah, Wisconsin, about half an hour outside of Milwaukee. And we'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, the Dow is up about 37 points out here. The S&P is up 7. It's trading out at 1826. We're going back out to Chris in Neshota, Wisconsin. We're taking a look at the natural gas contract out here. And Chris is taking a look at trying to get in on a short position inside of natural gas. So the first thing that I would throw out to you, now you're going to trade this based on a 60-minute chart, is that correct, Chris?
Yes, that or a shorter time frame. The trend is that I'm looking at is on the 60, but I would trade it probably on a 10-minute or 20-minute at least to take the entry.
Yeah, so when we take a look at, and the trend is your friend, so you got to make sure that you certainly are trading in the direction of the trend. And so, if you're going to use a 30-minute or a 60-minute, the question becomes, which trend is it that you use? I think you need to use a level that is certainly, higher than the trend that you are using. And what I kind of use is 4 times the level of whatever time frame it is that I'm trading on. And the reason I do that is because, let's say I was going to be swing trading something, I was going to be taking a look at a daily chart, I would really want to understand what the weekly time frame is. So that's, I'd multiply times 5. So multiplying times about 4 or 5. So if you're using a 30-minute chart, for an example, I would think you would really want to understand what the 120-minute chart is saying, because I would say that your trade time frame well, you want to be trading in the direction of the trend that is up above that level. So that's my experience, and that is as far as being a good way to trade. Now, I'll also just simply start here on the daily chart, because on the daily chart, this made an A to B equals CD down, and although it looked like it was going to make larger than the A to B equals CD down pattern that it made, meaning larger, I thought that it would get down to about the 375 level. It was stopped dead in its tracks here on Friday, and then yesterday was a big, wide-ranging bar to the upside. And that was a very powerful bar that formed out there. And so I would say, I think the area that you're looking at potentially shorting, and I think that this starts to get dangerous, is when it starts to get up into that December 23rd candle, all the way up and make a test of that swing point. This has only made, as you pointed out, a 50% retracement. And you had some pretty decent volume yesterday, certainly as far as bars go. That's a very strong bar, and it could be forming it could even be forming an A to B equals CD up pattern. And when I take a look at the different momentum systems out here, you want to make sure, and I'm going to go ahead and put on my screen. First, I'm going to put the natural gas contract on my screen that shows both the weekly and the daily charts out here. And in the weekly chart, this, although it got into what I'll call the cautionary zone, this is still in a strong bullish mode. In fact, using a momentum signal out here, you actually got a buy signal yesterday. And when we took a look at, so going short here is going to take some cojones out there for sure, because on the daily and the weekly, you most certainly are going against the trend as we speak here right now at this moment. And if I go put a 120-minute chart up on my screen out here, which I will do, I just got to grab the right chart. If I put the 120-minute chart on my screen, that's what's up here right now. This is if you get maybe if this closes below $4.29, then you can start really taking a look out there. But right now, the trend on this, the buyers have control. I haven't seen yet a signal here where, and it's those green and red little boxes. If the sellers are able to step in here and push and form a green-colored box on my system, and we get a close above that, it's actually a buying signal versus a selling signal out here. So I'm just not seeing the same trade that you are at the moment from a momentum standpoint. I mean, I think you're really starting to, this trend actually, changed back to the upside, and I think in a pretty good way.
Steve, I'm actually waiting for the price to come to somewhere around 4.71.
Yes.
Which was back in May.
Yes.
To where I would be ready to jump on it on the short.
Yeah, and that May, you're looking at that May 1st high out there. But I will say that at this stage, what you want to really be paying attention to is, how I would look at it. I would take a look at the current contract versus the continuous. So I would say maybe at this stage you would go and take a look at the H contract, and you'd want to watch what happens as the swing point from that December level gets tested out there. I would try to benchmark those volumes. Alrighty?
Thank you.
Hey, you bet. Thanks so much for calling, Chris. You have a great Tuesday. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Right now, the Dow is up 45. S&P is up 8. Now, I mentioned that today is an important trading session, and if you didn't catch the first hour, let me go back and show you why out here, because, we're talking with Chris about changes and trends, and so there's always little nuances that we want to be paying attention to. And one of the patterns that was able to identify out here in the ES-Mini and the S&P futures is that since January 2nd, so since we've come back into the new year, is that within an hour of the New York Stock Exchange, I mean, it could go on either side, the 8:30 to 10:30 time frame. Most of the times it happens really right around the open, right around 9:30, is that the market has sold off. So there's been, I'm not going to say there's been a seller. There's been selling in the marketplace that has been consistent right around that time frame. Took place on January 2nd when we came back in, took place, and this is the futures contract that I'm looking at on my screen out here, so you can't necessarily just take a look at the open of that session because we had the futures open up on Sunday, or was it Sunday? Yeah, Sunday evening on January 2nd, or around 6:30 in the morning. I take that back. So I'm just marking these levels out here with the New York Stock Exchange open, the stock market that you're used to seeing, and so it has been consistent every single day, and including yesterday. Yesterday was truly a classic because price got right back to the perigee level out there, which is an invisible level of support and resistance. Held, it was ideal. It was ideal. And then we saw price just really start to cascade down right around the 12 o'clock time frame. between 12 and 12:30 was a fairly wide-ranging bar on the way down in all of the indexes, all the futures, all the ETFs, or what have you. And then price went ahead and made that cascade fall all the way until the first bulls showed up, and they created that little hammer candle out here. So now, time-wise, we are at 10:36. And if we don't see selling coming into the market, because we certainly haven't seen it here yet, if we don't see selling coming in a significant way, it does have to make me say, something to think about. So if we do see selling, now it may not take place right this very second. Doesn't mean there's just a huge amount of selling, but if the markets continue to move higher, and look, a normal retracement of yesterday's move, it just means that this pattern here has gone away. First of all, let's try to be clear about that. But it does mean that pattern has gone away. Now, look, a normal retracement, irrespective of that pattern, would right now be a move up to about 1827 here at 1822. At 1827, what would form out here would be a Gartley buy pattern. We can see here the market is neither overbought nor oversold. That means that price is certainly free to run a bit higher. We can see that as price was moving down yesterday, it got into that oversold level, but continued to stay there. Look, when you get into an overbought or an oversold level, what you have to do is you've got to be waiting for reversal signals. You want to wait for candle formations. You need to know which candles are actually reversal signals out here. In this case here, certainly a hammer candle followed up with a bullish engulfing candle that took place at 4:30 yesterday was a set of reversal signals. So a Gartley sell pattern, and just because a Gartley sell sets up, in this case here, 0.618, we can draw this in on my screen, and we'll see you've got the expansion of your B to C swing point is equal to good old cherry pie, apple pie, actually, 3.4, what is it, 3.41 something or other? Maybe it's 3.14, not 3.4. In any event, right at the 1827, just because price gets up there, that doesn't mean that you would sell that. Just because that pattern would complete right there, you need to really understand the candlesticks out there and the power and the message and the meaning behind that. That's why when we were taking a look at, with Chris, take a look at natural gas. Yesterday's candle, very powerful candle out there, really does suggest that the price ought to go back up and test that swing point high in December, I believe it was, which is going to correlate over to a May swing point that he was looking at out there. You want to look at volumes as you're coming into swing points. You certainly want to be able to take a look at the candle formation as you're coming into a swing point. So far, the way that this has worked since January 2nd, since we've come back here, is right around this 10:30 time frame is where the selling has begun. And we're going to find out here within the next hour or so certainly during Basil's show. Let's see, it's Tuesday, so we've got the options hour, at 12 noon. We're going to know whether or not that same kind of pattern is in place today. And after a day like yesterday, one would expect that same style of pattern to be in place. If that pattern takes shape out here, then the key area to be watching is going to be the 1809.50 level inside of the ES Mini, because that's where you've got the hammer candle that was followed up with a bullish engulfing. That's an important level. If that area fails, then what we'd be looking at here would be more than the 1 to 1 A to B equals CD that it formed, and most likely the 1 to 1.272 A to B equals CD down. That would take you down to the next level, which is 1805. The ultimate outcome of any Gartley pattern, buy or sell, is that it turns into an A to B equals CD down, and that is exactly what took place here with this 0.786 Gartley sell pattern that formed. It turned into the A to B equals CD down, and that's when it got down to those areas here. It was not surprising to actually see that hammer candle come in. Now, with the way that it was cascading down, I was telling you that was a pretty important hammer candle out there. That took a lot of strength in order to get that kind of a reversal inside of the marketplace. Now, we haven't looked at the currency pairs here all day. So we are all morning, I should say. So we ought to do that. We ought to go take a look at the Euro-Japanese yen, just get a feel for what is going on out here. Now, in the case of the Euro-Japanese yen, as it's been making these lower lows, it's been doing it on what? On less relative strength out here. So we have seen a reversal. You saw a three-river Morningstar pattern that had confirmed here at about 3 o'clock yesterday afternoon. So right as our markets, they continued to move down, what you saw also taking place here was a reversal pattern inside the Euro-Japanese yen. Now, what's important about that? Well, what's important about that is that the Euro-Japanese yen tracks the U.S. market better than any other currency pair out there. So in that case there, that was also giving you a signal, hey, depending on what style of trading you were doing, if you were trading off a 30-minute chart like the ES Mini, it would say, hey, I should start to tighten my stop up here. And then you see the hammer, you see the bullish engulfing candle on a 30-minute chart. You say, time to take my money off the table here at that moment, and just simply, doesn't mean you have to go trade in the other direction, but you were getting enough signals out there that maybe you needed to look, maybe just needed to protect your profits for the day. Well, we can see here inside of the Euro-Japanese yen, it's on its way to making an A to B equals CD up. And quite frankly, the pattern that is underway here as we speak right now says it wants to actually trade up to about the 142 level. You're at 141.79. So if it's going to trade up there, then this pattern of the selling coming in within the first hour of trading seems like it's going to have a tough time competing against the Euro-Japanese yen out here, because it's saying that it does want to trade up maybe about to 142.31. Now at 142 even Steven, it does set up a Gartley, a 0.618 Gartley sell pattern. But this A to B equals CD that's formed here says to me it actually wants to go to higher levels. Let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you this morning?
Okay. I was wondering if you could look at crude oil.
I absolutely can. What's a time frame that you're looking at trading light sweet crude on?
I don't know, probably a month.
Okay. So if we take a look at, and you're not in a position here as we speak at the moment.
That's right.
Okay, so light sweet crude, it's interesting. It's in a downtrend for sure. And yesterday, what it did, Lou, is we take a look at the. I've got the continuous contract. I'll pull up on my screen here as soon as I can find it. It's got to be close out here. Give me a moment. Light sweet crude. So what it did yesterday was it broke a B point with volume, and the B point that I'm looking at is the swing from November 27, 91.77, and that had volume of 160,000 contracts, and it was broke yesterday with 255. So this, as a longer-term projection, suggests that 84.71 is its mark. Now it's gotten into a sold condition if we just simply rely upon our 14-period relative strength. So the real question would be, where is it that you would come in on this trade here? And is that your magic? Is that your magic question for me?
That's the magic question. Yeah.
This one is. It really depends on your risk tolerance. I'd say, okay, so here's how you would have to do it. You'd have to go down to a shorter-term time frame. I think that the least riskiest way to do this is to find some type of Gartley pattern that's going a Gartley sell pattern, and that would be the way that you would look at it. So if we take a look at light sweet crude on a 30-minute chart out here, let me refresh my screen, make sure I've got all of the active data. What I would be looking for is some type of A to B equals CD to the upside, and then a reversal signal, a reversal candle that would confirm that pattern. So while this is updating, we're going to see if there's a potential pattern out there, and that's how I would take a look at a trade out here. So we can take a look at a point of an A to B equals CD. That would be the low out here at about 2:30 in the afternoon, January 9th, about $91.24. That would be my A point. My B point would be the high that was put in at 9 a.m. on January 10th, 93.38, and my C point, I would come all the way down to about 2:30 in the afternoon. This is yesterday at about 91.48. If light sweet crude can get, the first place I'd be looking at is if this thing could actually bounce up to about 93.62. That would confirm an A to B equals CD pattern. If that level doesn't, if you don't see a reversal there, candlestick-wise, a 94.19 would be an area to be paying attention to, and that's how I would trade it. Ideally, what this would do here, Lou, is get to about the 93.62 level, because you've got a nice big volume downdraft bar from 11 o'clock in the morning on January 8th. And so if you're coming in there with lighter than 30,000 contracts, which most likely you would be, that would be a place where you could take a look at a short position.
Okay. Very good. Yes.
But you really got to be paying attention to volumes. You've got to pay attention to candle signals and reversals out there, in order to be able to take that trade, in my opinion.
Okay. Thank you.
Alrighty?
Again. Thank you.
Okay, you bet. You have a nice day. That was Lou in Nashville. That was taking a look at light sweet crude, which did break the B point of an A to B equals CD on the way down, and and looking for a strategic way in order to be able to go ahead and take a trade here inside of light sweet crude. Angie in the den telling us that we've got 1,270 plus net advancing issues inside of the New York Stock Exchange. And then thank you, Angie, for that. In fact, that's a reason for us to go take a look at the New York Stock Exchange. Let's go do that here as we speak right now. Yesterday you had some nice movement to the downside. And so let's go take a look at the bullish and the bearish case out here. Might as well take a look at both sides of the trade, because when you are setting up a trade, you've got to take a look at both sides out here. And if we take a look at what the New York Stock Exchange here did yesterday, let me refresh my screen as well, make it a little bit easier for you to show. What the New York Stock Exchange did was it moved its price oscillator. Come on, work for me, would you? Let me try this. Maybe that works. There we go. Okay. What it did was it moved its price oscillator close to zero, not below zero. It got down to a level of 13. Oh, I say I got a mistake here. So it got down to a level of 13 yesterday, and I've got to pull a spreadsheet up here. Oh, I got the wrong spreadsheet. How does that work in life here? Let me pull up the right spreadsheet. What the New York Stock Exchange actually needs today in order for the bears to really say that they are going to take charge here is 68 net declining issues. 68 net declining issues in order for them to take control of the New York Stock Exchange. And is that important? I think it is, because it's the wider swath of the market. So the price oscillator did not get below zero. The volume oscillator, on the other hand, did. So we have a little bit of a divergence here. Now, I'm going with the price oscillator because the summation index is still turned up. The price oscillator going negative is not enough to turn down the summation index. You need the price oscillator to do that. In this case here, getting in below zero, getting below, what did I say? I gave you the number, net declining issues of 68, I believe, 68 or more. You would get the price oscillator below zero. If we take a look at the New York Stock Exchange and we take a look at the damage that was done yesterday, really not that big of a deal out here. If you go from the most recent swing point low, and what I mean by that when I say not a big deal, if you just simply go from the December 13th low to the high that was put in on New Year's Eve, the New York Stock Exchange didn't even make the 0.382 retracement yesterday. Something to think about. Did not make the 0.382 retracement yesterday. Now, this is no bullish candle, that is for sure, in what we're taking a look at today. That's certainly no reversal candle out here. And after a day like yesterday, okay, maybe a pause is in order. But, I got to take a look at the pattern of the selling that is supposed to begin right around the 10:30 time frame. And if that just doesn't take place today, there's another thing to truly to take a look at. So New York Stock Exchange is not at all in a full bearish mode whatsoever. It's not, and if you took a look at the retracement, it's not there. If we go take a look at the daily indexes here, let's do that just to see where we're at here. If you take a look at yesterday's move inside of the Dow, it made the 0.382 retracement. That's what it did. If you come off of the December 12th low to the high out here on December 31st, it made a 0.382 retracement. Now, look, that's a normal place to let folks off of the elevator. So we get back from this break here. We'll go take a look at the ETF structures. Let's go see what kind of volume it is that we've got. Very possible we're setting up a new B to a C of an A to B equals CD to the downside. 877-927-6648. Dow's up 46. S&P is up 9. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 48. S&P is up 9. So let's go check in on the ETFs. Let's go see what is going on out here. So we take a look at the Qs. We'll start off with the Qs. What did we have take place yesterday? You know, we have a little nice high volume. First we got a high volume low, which inside of the Qs, if you go back and study your Qs chart, what you're going to see is volume plays a little different role in the Qs versus any of the other ETF structures out there. High volume lows, the majority of the time, and I'm talking like 90% of the time, tend to actually be initiation points of moves higher. In this case here, we're looking at the December 18th, albeit Uncle Ben Bernanke day out there. It's a little going-away party. It had 68 million shares inside of the Qs. The market pulled back yesterday, closed inside that swing point, did it on what? 48 million shares. So coming into a swing point, closing inside a swing point on lighter volume, suggested to me, still does at this moment, because what you're having right now here today is an inside day. So yesterday down with 48 million. So far today up with 11 million shares. But that's pretty good volume for an hour and a half of trading out here. So not too shabby, but still an inside day. Says, a nice buy, potentially right around the $85 mark out there, as a nice 0.786 Gartley buy pattern. We'll see if that comes to fruition out here. The one thing and to pay attention to is, the Qs had a pretty good volume day yesterday, and those volume bars, if you go back to the left-hand side of my chart, you can see they actually mark initiation points out there. So instead of being afraid of volume to the downside in the Qs, the volume is actually your friend. Now, I can't tell you the reason why that phenomena takes place. I just know that it does, and you treat it differently. At least I treat it differently. If we take a look at the diamonds here, yesterday the diamonds making the 0.382 retracement. Okay, no big deal. 3.382. Now, what's the big deal? They had some volume. They had 10 million shares coming out. But, of course, never made it back like the Qs here. Were able to make it back to December 18th. The diamonds were not able to do that. The diamonds had 15 million shares on that trading session. Yesterday came back with 10 million shares. Now, today, you're up with, 2 million shares? Still not too bad for a, we'll have to see what kind of volume continues on throughout the trading session, but so far not too shabby. What really matters is what's the volume here at the end of the day. If volume at the end of the day yesterday was down with 10 million and you're up here with half of that, 5 million, 6 million shares, something like that, that tells you, you could easily be forming the B to a C of an A to B equals CD down. That's what's going on inside the diamonds. If we take a look at the IWM yesterday also not making the 0.382 retracement. Down really just more of a sideways consolidation move. December 18th, nowhere near the December 18th bar. Now, in the case of the IWM, doesn't have the same kind of huge volume spike that the SPYs and the Qs do. The volume on December 18th was 52 million shares, but it has volume of 49 million shares on December 20th, which is what it was trading into, and yesterday was down with 45 million shares. Not exactly a total breakdown to the downside inside of the IWM yesterday. It does have that 3 drive to a top pattern. That is bearish out here. That's important because at 115.97, you see a close above that, folks. And unlike in light sweet crude with regard to Lou in Nashua trying to play light sweet crude to the downside, if you break this 3 drive to a top pattern to the upside, it tells you that you've got a strong momentum move to the upside. And I would say jump on that trade, Lou, versus the light sweet crude trade out there. That's if you get a close above that 3 drive to a top pattern. We are not there just yet. Now, if we take a look at the SPY, guess I did not take a look at the SPY. If we take a look at the SPY, what did the SPY do yesterday? Oh, the SPY yesterday did test December 18th. But that had 234 million shares, and yesterday you were down with what? 149 million shares. Folks, stay tuned. Our man Basil Chapman, he'll be up next. Thanks so much for joining me. Glad to be here with you. We got the Options Hour after Basil. Then we got Daryl Martin, David White, Andy Hecht, and the Tom O'Brien Show. Have a great Tuesday, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.